Good morning, everybody, and welcome to Beat the Bell presented by Kane Capital. Happy Friday. Today is all about high energy. We're getting the job done. Monday, Tuesday, Wednesday, Thursday, out of the way. Great trading. The market has provided a ton of opportunity. One more day to make things happen. Let's talk trading. Let's talk markets. And for that, we have with us our beautiful panel, starting with Coach Dipka. Coach, what's going on?
Good morning, everybody. Went to war last night. They try to hack us. They try to take us down. We're still fucking here. No issues besides a little lack of sleep, but we're good to go. Ready for the show and ready to bank today. Let's go.
Fuck them. We keep the train rolling. The Kane train does not stop for anybody. Next up, Money Mander.
Get on the train or get off the tracks, what I have to say to that. Let's kill today. I'm excited for Friday.
I love it. Looking fresh as always. Who else we got? Ramsey Rippers.
Nothing much else needed to say. Let's go.
All right, Diamond Trades.
Super eventful night. Glad we make it out unscathed. Let's get after it today.
Mo, good morning, my friend.
Good morning, my friend. Let's get it, brother.
All right, and Snipes.
Good morning, guys. Yeah, you pretty much get the gist of that. I'm ready to eat some bags today, and I know you guys are too.
All right, so as I mentioned, today we're looking to have some more fun. The market is trading higher here in pre-market. Futures up 35 points from yesterday's close. Today is OPEX, so things might get a little bit interesting, even while we're on the show here, because we typically see some movement at around 9 a.m. Eastern. Let's talk about what today is going to look like. Let's talk about the economic calendar, what we saw this week, how the markets reacted, and what it means moving forward. For that, we're going to bring in our macro experts, Money Mander and Noah.
Yes, so this week has been pretty choppy in the indices, and that's really on the back of some very choppy and mixed economic data that we've been having. Ryan, if you could throw up the chart of the week. There we go. So we've been just sort of, pinballing back and forth, right? The entire week in the indices, and that's really largely on the back of the mixed data that we're getting. So we had PPI come down, right? And so that shows you that whole story of peak inflation, people are still sort of clinging on to that because there are definitely several data points that support that. Another thing that we can talk about when it comes to peak inflation is looking at the shipping rates, right, from U.S. to China. Those are back down to basically June 2020 lows, 83% off the highs, showing you that supplier costs really are coming down. And so I think that the more that people focus on this narrative that we've hit peak inflation, the more that people want to look for a pivot, sort of keeping them in that mindset, where's the next pivot? Where's the next pivot? Also, yesterday we had mortgage rates basically plunge from about 7.08% to 6.61%. That's the largest 1 week drop that we've had since 1981. That, in addition to the fact that we had housing starts and building permits come in slightly to the downside this week, showing you that little bit of housing market weakness. That may be the next shoe to drop, right? And that will have deflationary tailwind. So I think that people are looking at a lot of what's going on in the macro data and sort of extrapolating out, okay, we're at peak inflation, when's that pivot? But then you'll get some other economic data, right, with retail sales surprising to the upside, right? Unemployment, again, coming down, showing you that the labor market is still really, really tight. And so we kind of keep going back and forth between these two regimes of, okay, inflation has peaked and, it's going to come down. When's the Fed going to pivot? When's the Fed going to pivot? Versus, oh, wait, the economy is still really, really strong. Can we really bring inflation down without slowing down the economy so much that we come into a recession? And so I think that as those two things play out, as we get more data coming in the coming months, one of those two sentiments is really going to prevail, and we'll see the market really decide to make its next leg. But until then, I really do expect some continued chop, just like we've seen this week.
Yeah, I'm on the chop narrative as well. It feels like right now we were so excited for the week because we thought we'd finally have a week of trend with no, economic catalyst. Now it feels like without some catalyst, the markets are just waiting for the next numbers to come out, whatever they may be. And every time we get around this 400 SPY, 4,000 SPX level, it's always chop fest. So really no surprise there from like price point where we're trading at. The one thing I wanted to hit on that we did talk on Wednesday, and you just segued beautifully into this, is the difference between, inflation starting to come down, but we're not seeing any decline in the economy right now, right? So that's your pivot kind of between them being this dovish pivot narrative is their pivot if they have to, right? So their two things are unemployment and price stability. I mean, price stability, inflation is still crazy high, and we haven't seen any real drawdown in the economy strength yet. And we were talking a couple weeks ago, and we said, as far as EPS goes and everything, once we finally start to see these EPSs are going to have to come down. Companies are making less money. As we just saw, a lot of these companies just missed on revenues for the past quarter. So to bring their EPS up, and some of the bigger misses were actually in EPS because they weren't able to cut expenses, they're going to have to start doing layoffs. And so that brought us right into unemployment rate we were talking about. And what do we start seeing coming out? We said this a couple weeks ago. Now we got Amazon, 10,000 employee layoff. We had Meta, 11,000 employee layoff. I just saw this one. So solely between Twitter, Stripe, Redfin, and Lyft, these were some of those companies that exploded in 2020, 2021. They had excessive growth and took on major hires for expansion there. They had 100,000 layoffs just between the four companies. And obviously, I'm sure Twitter was a big bulk of that. Elon kind of cleared house. But that's my thing I'm really watching there is as we start to see these layoffs come in, I think inflation, as we look in this bigger picture into like next year, maybe, right? Inflation's the big narrative right now. Everyone's so concerned with inflation. It is through the roof. But I think we could get into this point where companies are now going to have to start doing mass layoffs to cut or to cut expenses, kind of keep their ship afloat. I think we're not going to see inflation being the big narrative anymore. It's really going to flip into unemployment is now ripping, up the way inflation did. Inflation will come down now because demand will pull back, but what does the Fed do there? That's where I think we could potentially see this pivot talk. It's not right now.
Yeah, the last thing I would point out on the inflation front too is that as we move into next year, obviously prices were elevated at the beginning of this year. And so when you get to next March, right, let's say when we had, really basically almost peak inflation, that those year over year numbers begin to look better, right? As opposed to prices were relatively normal this time last year. And so when you do the year over year calculation, it's still going to be, elevated 7%. But when you're going against elevated prices with elevated prices, like we will be going into next year, I think that that's favorable in terms of the year over year comps because, it won't look quite as bad on the face of it, on the year over year change. So I think that that's something else that we definitely have to pay attention to going into next year. But yeah, that's going to be it for us on the Fed forecast. And we'll pass it back to Alejandro.
Awesome. Thank you, fellas. Time for the system. Let me go ahead and share my screen and we'll get into it. So on Thursday, guys, we got the sell signal, which is the bearish cross of the 10 below the 50 SMA on the 30-minute SPX chart. Consequently, we had this huge sell-off over 50 points overnight, but we did end up bouncing. So then we ask ourselves, why? Obviously, we had 3,900 SPX support, but also if we take a look at the hourly chart, the 50 SMA is in a very strong uptrend. Now, it was tricky to trade around this moving average. Yesterday was choppy, as we know. We did have news intraday, so it wasn't necessarily smooth sailing. But now we see, especially with the market trading higher here in pre-market, futures up nicely, the 50 SMA on the hourly chart being in such a strong uptrend is the visual representation of momentum in the market, and it was just too strong to break. So going into today, what is it that we want to look for? First things first, we're going to be watching the 50 SMA on the 30-minute chart. If we can get back over that 50 SMA, which closed the day yesterday at 39.72 SPX, we're going to be looking for a potential buy signal. That 50 SMA would flip from its current resistance into support. So over the 50 SMA, I would be bullish. I did get long here in the pre-market in anticipation of the break over the 50 SMA and up nicely on that trade. So we're going to look for continuation. Again, the main lesson to be learned here, guys, is the hourly chart and what it was telling us. The 50 SMA in such a strong uptrend meant that it was going to be difficult for the market to come down. So I'll stop sharing my screen. Let's go over to Coach Dipka now for Dipka's certified levels of the day. Paging Coach Dipka.
Yep, I'm here. Good morning, guys. Good morning. Good morning. All right, we're going to pull up the daily chart as usual. Most of you are still in bed. Didn't get your charting done. I took on all the bots last night, all the hackers, and I still was able to get the levels done for you guys because that's how much you all mean to me. And let's set the timer to 60 and let's get going. All right. So we're going to start with our big support. There's no debate here, right? 390, irrefutable, our clear cut low of this range. 390, 389.92 is my fib. I got a double one at 389.52. So I'll be taking longs at 390.25 for next week, or maybe even 2 weeks out, and I'll stop under 389.52 as my confirmation, right? So that fib is going to help me out and say, hey, this is where I'll stop out. If we blow through that 38.2, I'll get out. All right, so that's the support. Now, guys, it's OPEX today. What does that mean? Chop City. They're going to pull it one way, pull it the other way, and it's just going to be a shit show today, all right? 394.40 is a solid level, but what is that real big level? It's actually 395. 395 to 394.40 is going to be your big overhead resistance. If we break that, we have room up to that 400. 400 is going to be my ceiling. So I got my big support at 390, big pivot level at 395. I'll play both ways off 395 to 394.40. And as we approach that, look at all those fibs I have up at 398 to 400, right? And we saw what happened when we got up to 400 the other day. It had a really hard time getting through this zone, even with that incredible strength from the low CPI numbers, right? So that 400 is going to be the ceiling for the day. And that is it. 60 seconds. Beat the timer. As always, we're going to pass it back to Alejandro here to put you guys back to bed.
Perfect timing there, Coach. And thank you for those levels. We'll be on the lookout today. I also don't appreciate what you said at the end there. I just realized, but whatever. All right, next is Mo Mamba with unusual catch of the day. What are we looking at?
All right, brother. Let's go ahead and share the screen here. All right, guys. So Wednesday. So I don't have anything from yesterday on the flow that piqued my interest, but I got to point out Wednesday, this flow around noon Central Time was massive. I mean, so this was the 16th, right? So check out SPY got a little ahead of the other big caps, other large caps, Amazon, Google, and Meta that came in. But SPY started out first. You could see here 1124, 1.48 mil, 1.45 mil for weekly expiration puts that came in, right? So this is where it all started. And now we're going to hop into Amazon. You can see Amazon right here, 1150. Look at the flow that just got smacked on Amazon. These were asks for 1118 puts, right? Weekly puts. And then I noticed Meta as well. Meta right here, 1150 as well. Huge flow. And the last one that popped up on the flow that piqued my interest was Google, 3.9 mil, 1150 as well. Now we'll go back and hop in these charts here. So 1116 was right here. So this was the start of 1116 right there. So this is the candle start. This was the peak. 1145 candle, 5-minute time frame. This was SPY's peak right here. We never saw that. The flows came in and we just dropped. And then you see the huge gap down the next day. The thing is, though, I've never seen that type of flow just come in. I've never seen that. I've never experienced that with the unusual well flow that comes in. So this was my first time. But I'll tell you, I know for next time, though, it was something to watch. Though it did pique my interest big time. And it was something to watch. Same thing on Amazon. This is the 16th here. They ended up grabbing the puts got smacked up here at highs and then dropped. You never saw that again. They were right away in the money. Google as well. This was the 16th, 1150 right here. This was the peak, drop, gap down. Last but not least, Meta. 16th right here, 1145, 1150. So noon, this was the area consolidated, got smacked with puts, dropped, gap down. So this isn't advice that this will always happen, but this does pique my interest for next time. If I see heavy puts coming in, I'd want to position myself for the downside, right? I just wanted to experience it the first time, just see how it is with this huge, massive flow coming in. But flow don't lie. Flow don't lie. All right, Hondo, that'll be it. Thank you.
All right. Awesome, Mo. Thank you for that. Let's go back to Coach's Corner.
All right. Listen. I feel like I have a good standing on FinTwit, no beefs with anybody. But today, I'm going to play devil's advocate. I am not going to say what many of you are going to like to hear. We're going to bring in Money Mander, and we're going to ask, and we're going to debate on the question of the day. EMAs, are they cash or are they trash? Okay, we're going to start with Money Mander, and I'm going to take the stance because this is what I truly feel. EMAs are absolute garbage. Throw them off your charts, get them off your screen. They hurt more, they do more harm than they do good. Okay, so we're going to start with Money Mander and see what he thinks here because I know you're a pretty big advocate for the EMAs. So we'll start with you.
That I am. They're cash on a trend day and they're trash on a chop day. So I'm going to answer your question like a politician here. If you don't have an intraday trend, then they're pretty much useless, right? Because all they're doing, it's a moving trend line, basically. It's calculating recent closing candle prices of a recent trend. And so if you're just chopping back and forth, absolutely useless. You're going to have crossovers all day long. In that point, junk, you're better off with trend lines, price points, different indicators of conviction for entering trades. Now on trend day, they're money. How can you say they're not? When we have those all-day buys, those all-day sells, and you barely get moves back to like the 2130 cloud, and then you immediately reject that or you bid off of that, you ride the 8-9 all day long, they're money for that, and you can't tell me otherwise. The biggest reason they're money is they'll keep you in trades on trend days like that. That's why they're money, because you don't get this fear of like, I have to sell like I'm up. As long as the trend is in your favor and you're riding the EMAs, that's your conviction to stay in it. That's where they're cash.
That's easy to say after the day ends, Mander, but what happens intraday? You don't know really if it's a trend day when you're in the trade until really the day is over. It was a trend day. Maybe you could say that after 1 o'clock, but by then maybe you missed the move. Or let's roll the tape, Ryan. Let's roll the tape and see what happens 90% of the time. This absolute pecker candle. Ryan's going to pull it up for us and look at one of the trades that I was actually in yesterday, not based on EMAs. But Ryan, can we pull that chart up? There it is. So you see that EMA right there? Okay. Look at that absolute fucking pecker candle right at that EMA. Blew through my stop. And Ryan, can we pull up the result of my trade from yesterday based on this? I didn't take this trade based off of an EMA at all. I just found it funny or ironic that the EMA was also there. I actually had a fib there and a chart pattern that I really liked. And, I got caught in a news candle, but I just see this so often around that 21 to 25 EMA is you see this massive blowout candle. It almost feels intentional. I think retail traders have to be at least aware of this and careful. Now, I will say the Golden Goose uses an EMA. That is the one exception to this debate. Golden Goose is valid, but anything else, if you are trading a trend day and you're waiting for that pullback to the 21 EMA, I mean, dude, you already missed 50, 75% of the move. I think there needs to be another way for you to trade breakouts or breakdowns on a trend day rather than wait for that EMA pullback, right? Because, with that EMA pullback, maybe you have a chart pattern. Maybe you have a pullback, a retracement to a fib. I think those are better reasons to get into trade. Maybe a break, hook, and go, like a retest. EMAs, though, I mean, all they do is just add a little bit of confidence to a trade. I think they do more harm than good for retail. So that's just me.
All right. Well, listen, they're like any other indicator. They're useless in a vacuum, as Diamond always says. You have to have added layers of conviction. In that one, you shorted off the EMA, but we double bottomed off this 50 fib we were looking at 39.08 all week.
Say that again? You cut out for me.
You shorted off the EMA there, but we double bottomed off of the 50 fib at 39.08 that we were talking about all week.
What does that have to do with
in a vacuum? They're useless, but like when you stack them, if you had bullish EMAs on top of your double bottom off the fib and this, that, and the other, then they're great. And by 10:30, once we have you giving us 4 higher lows, trend day is on.
Some of the days, I don't know. We got a midday trend yesterday, which was kind of random. So I feel like you get those really solid all day trend days, maybe 3 times a month at max. But that's gonna wrap it up for this, guys. I also want to just hit real quick on that trade from yesterday where I showed you that big candle. That used that as a sort of a reminder of stop losses, right? Stop losses are so important. I didn't have a hard stop in, got caught in a news candle, ended up, I had like 2 ES cons, ended up down like
Can
3
we
racks.
can we do a proper introduction to this trade? Market or Ryan, do you mind running Market Moron quickly? Let's do this the right way.
All right, yeah.
And then we'll let you explain. All right, Coach Dipka, yesterday's Market Moron. He just showed you the chart. He showed you the loss. I'll be honest, this one's a little bit difficult for me because I was in the same trade. I didn't lose nearly as much because I'm really good at risk management. But brother, this man just let the trade rip against him. He was just like, you know what? Fuck it. Half the week's profits gone. Smell you later. Pecker into outer space. And this guy was short for the whole ride. And then on top of that, he puts his stop in at 39.61 ES. The top of the move ends up being 39.62. It doesn't get worse than that. So he gets stopped out. It comes back. He would have been in the green or almost green. Doesn't get much worse.
So,
I mean,
Hondo, the best part about this is we're blaming the 9 EMA now. We're not even blaming the news. We're just blaming the freaking EMA on that candle.
yeah.
That's the worst part.
Oh, fuck. I mean, yeah, there was some news there, but again, I think you were going to start talking about risk management. Take this as an opportunity to talk about stop losses and whatnot.
Yeah, so listen, everybody has a bad beat once in a while. I like to think of myself as a pretty confident trader. I think I have a really well-constructed system. I'm pretty disciplined, and I really follow a pretty similar process every day. I enter my trade with a certain amount of size. Depending on my confidence in the trade, I have a stop loss in place. I follow that plan 98, 99% of the time. But yesterday was just one of those days where I just didn't have a hard stop loss in for honestly no real reason. I said on Discord, I was like, I'll stop around 3935, and I was in at 3928. So that's risking 7 points. Next thing I know, we get one candle that rips up $2. We're already at 3945. So, I'm already 10 points. The trade is already 10 points against me. At that point, we got close to my big resistance of the day at 395, right? And this is where I made that crucial mistake. When you're down like that and a trade doesn't go according to plan, gotta just cut the position. Right?
Yeah.
I actually didn't end up cutting that position, and I put a stop loss. I was like, okay, I call this the hope effect, where traders love to grasp onto a new piece of hope to keep. They literally talk themselves into the trade. I know some of you guys do this. You talk yourself into the trade when it goes against you, right? So my plan was for the fib to work at 391 or 391.68. Okay. Now we just had a $2 candle. We're at 393, 394. Okay. That went $2 against me. My plan is invalidated. I exit the trade. The hope effect is where you guys, or in myself included in this situation, see a key level at 395, and you're like, all right, we're already at 393, 394. I might as well just wait to see if it rejects at 395, right? You're hoping, you're grasping for a reason to stay in the trade, right? When it doesn't go according to plan, I have to take the loss. I can always get back in if I really think, oh, I was right. They're just stopping me out, some bullshit. So that's a little lesson of the day. Careful with that hope effect. Hard stops, I think they're important, just in case. You never know if you're going to get news. I will say, I may be market moron, but Alejandro has gotten more news candles.
All right, we're going to go ahead and end the segment right here. This is a perfect time to transition over to Snipes' micro minute. Snipes, what levels do you have for us this morning?
What's up, guys? I got 4 levels for you guys as typical. I got 398.28, 397.40, 396.65, and 396.18. These are the levels I'm going to be looking at today, and I'll be taking trades for bounces and rejections off these levels.
All right. Thank you, sir. Always short and sweet. Now for Bet the Bell with Ramsey. What are we looking at today? Ramsey, you're on.
Holy shit. Hondo, man. You got to keep this more exciting, bro.
Dude, you got all right.
Putting me to bed. All right, here we go. All right, guys. So since we're pretty green in this pre-market indices of about 1% respectively, we got a little twist on this green or red question that we usually start off with. And instead, I want to know on this beautiful OPEX Friday, will SPY see over that $400 level? And if so, will she hold? Dipka, talk to me.
Will we see over 4? Trading at 397, 390. We're trading at 398 right now. It's $2. It's OPEX. It's going to be wild. You're going to go up. We're going to go down. We'll hit 400. We'll hit 395. We'll close at 405 somehow. I'm thinking today's going to be a wild day. We'll see over 400, and I think we'll close over 400 as well. OPEX, we've seen these massive rallies on OPEX day to kill put premium. I think puts were at an all-time high. Open interest on puts was at an all-time high for retail or something a couple weeks ago. So I'd imagine some of those were monthlies, and they're going to want to let those expire in the dust. So, yeah, I think we close over 400 today.
Hondo.
All right. We're closing over 400. I'll tell you why. I'm due. For those of you that were in the Discord yesterday, or if you follow me on Twitter, I got absolutely smoked, beyond smoked twice yesterday. First on the news. Second, the market rallies 25 points with less than 5 minutes to the close, and I was short. I'm in long right now. I'm in about 20 points of profit. I'm due for an absolute ripper. Send us over SPX 4000.
Big trade coming for Dwayne the System today. Mo.
Dwayne beyond swap. No, come on, Ryan.
What's up? I think you're due for another news headline. I think we're all due for another news headline with Hondo positioning himself. But do we close over SPY 400 today? Damn. I'm gonna go with yeah. I think we do. I think we close close to that daily supply zone up above. Yeah. Gotcha.
All right, cool. And I saved my macro guys for the next question. Thank you, Mo. Now, like the broader market, financials are also undergoing a pretty nice rally off of lows. XLF up about 20%. The main individual names, your JP Morgans, Bank of America, Goldman Sachs, whatnot, up around 30-35% as well off of lows. So what I want to know is the bottom in on financials. Money Mander, start us off.
I don't believe it is. And the thing I've been hitting on a lot of these episodes is the insane amount of outstanding credit card debt right now. The only reason I don't think bottom could be in financials is I think we're starting going to see a bunch of delinquencies on these credit card debts, going to drag their revenues down a ton. So I'm not saying bottom's in on this one.
Future Fed forecast, anything else? As far as the sector? Yeah, I know I'm talking to you.
What do you mean?
Like you talk about credit card debt, but as far as like the interest rates and whatnot, the consistent, talk and action as far as the Fed affecting financials.
Yeah, I don't think so. Yeah, so they forward look credit card interest rates, but I still think they're probably going to see higher just because, they come down in these pivot narratives. Same thing with the mortgage rates dropping insanely this week. I don't think bottom's in on yields. I don't think bottom's in on interest rates, anything like that. So I think they continue to hike. Delinquencies go up. We see revenues come down. So bottom's not in on this sector yet.
It's fair. Noah.
I think bottom could be in for the year. Bottom is not in overall. If you look at the chart, they just got to bounce off of that pre-pandemic. So right before COVID hit, they got to bounce basically right off that level. XLF did at the $30 level, kind of trading in this 30 to 36 range. I think the bottom may be in for the next month and a half or so, but definitely not, in the broader scheme of things.
Gotcha. And Snipes, give us something good. Finish us off. What do you say?
I'm going to have to say that the bottom is past just because I want to make it interesting. And I think that it is possible that we could see this rally. We could close above 4,000.
Alejandro, back to you, my man. That does it for Bet the Bell.
All right. Okay, next. So it is Friday, which means it's time for Member of the Week. There was one member that really stood out this week, the Tesla Slayer. The guy made so much money, easily a 5-figure week I would expect he had to have cleared at least 25K. Our very own Kane Capital member, Paul Dozer. Give him a round. Paul, well done. We have no idea what you actually look like since you're standing backwards in your profile picture, but it's almost like you're part of my family. You're the fucking man. Keep ripping it. Keep making money. You're inspiring everybody. We love you. Paul Dozer, give it up one more time for the kid.
And Dozer is posting plays and the Guru plays too. Like, dude,
GOAT.
he's given play-by-play analysis, dude.
He's
it's
the GOAT.
insane.
Oh,
He's
and
writing
also he
journals
started
on his
using
face,
the
man.
system, so now it's really over. It's
You gotta
over.
check, guys. Check it out. Everyone has access to the Guru plays. Dozer, keep an eye on that tab for Dozer. He's been killing it, and he's posting like screenshots of his sizing too before the play rips, and good stuff, man. Good stuff.
Yeah, awesome stuff. Okay. Now today's top watches, guys. Let's start to wrap up the show here. We're going to go around and ask the head traders what it is that they're taking a look at headed into today. We're going to go ahead and start with Coach Dipka. Coach, what is on your watch today?
Yeah, well, there's two things I'm looking at, and it's pretty. I mean, it's not about. I can't narrow it down to one. There's two top watches for me. We hit 395. I slap it long. We hit 400, maybe a little less, but I grabbed short there for some SPX lottos around 400. 395 to 396 would be an awesome retest. Give me a fit. I'll say 395 will be my top watch today for a long opportunity with a stop under 394.40. 395 long, 394.40 stop loss underneath candle close.
Thank you, sir. Noah?
Top watch today is going to be Disney. They had that gap down on earnings. I guess it was last week. Got a rally up to that $96, $7 level. Came down, held that gap fill level. When these names gap down or gap up on earnings, that gap fill level is very important support or resistance. We also have anchored VWAP from the gap down, acting as support down there on the 91 level. We're going to gap up this morning to like 92.5. I'm looking for that 92 to remain a support and then rally higher to fill the gap.
All right, Perma Bear Mander. Let's see what bearish setup he's got for us today, even though the market's
Bullish,
on 30
believe
points.
it or not. Really similar setup to Diamond there, just on Google. This had the same thing, the gap down off of earnings there, got a break hook and go, and held this level twice now. So sitting in the gap, really just needs to get a squeeze over that $100 level for a big move into that thin volume shelf. But markets are up here. I think this one's going to open up around 99. So a breakthrough that recent high, like 114, I think squeezes on this name.
I love it. Versatile, nimble, ready to trade long when the time is right. Okay. And now I think we have one more. Mo.
Yes, sir. Intel. All right, guys, we're slightly gapping up on Intel here at 30.3. So we are above that call trigger. If we do stay above that call trigger, then I'll look for that call trigger to be a put trigger now. All right. So that 30.25 level up there, watch that as a put trigger if we do stay above. And you do have that gap fill up there to that 30.6, right? So watch that. If we do come down, though, I like our close 2190 as a put trigger as well. Okay, if we come back within, if we open within 30.25 and 2990, I like the 2990 as a put trigger and that 30.25 as a call trigger. Thanks, Honda.
Awesome. You got it. And of course, guys, I'll just be watching the system today. Once again, happy Friday. It's been a hell of a week. If you guys aren't already in the Discord, we trade live all day long. The 7 of us, come join us. You can go to kane-capital.com. If you enjoyed the show, give us a like on YouTube. We really appreciate the support. Awesome week, guys. Thank you for tuning in, and we'll see you on Monday morning at 8:30 Eastern time.